Hello, everybody. Welcome to Trading the Close. My name is Drew Dosick. And guys, today we had some data hit the markets. We had the JOLTS jobs data came in slightly weaker at 10 o'clock. Then we had the ISM services PMI report come out, actually slightly higher. Now, Friday, be paying attention at 8:30 in the morning. We have non-farm payrolls, plus we've got unemployment data that will be released. Then later on Friday at 10 o'clock, we will have the Michigan consumer sentiment. All right, guys, so let's jump into the market summary board to see where everything panned out today in the markets. We've got Dow Jones experienced a decent fall today, down 1.12%. NASDAQ a little over flat, up 0.16%. S&P 500 down 0.38%. U.S. oil down 1.07%. Gold down 0.9%. Both gold and silver under a little pressure today. And Bitcoin also under a little pressure, down 2.87%. We're going to look at those charts here in just a few moments. But first, the S&P 500 heat map that we go to. And NVIDIA, as you see here, had a nice day, up 1%. Google up 2.43%. Microsoft up 1.04%. Meta was declining, though. We're going to look at this stock later on today also and see why it did fall 1.81% and what's happening on that chart. Apple was down 0.77%, continues to slide towards that measured move, as we pointed out in yesterday's show. JP Morgan down 2.29%, and really the whole finance sector in the red. But we noticed how that was green not that long ago, being one of the stronger sectors on the trading day just a few days ago. Besides that, look, we do have a lot of red throughout the charts. Now, tech has been holding up the markets for quite some time. How long can that last? No one really knows, but we will see. And we can always just digest the charts, because that's what we do with technical analysis. We give probabilities on where prices are going to go each and every day. And I want to point that out too. Guys, no one knows where the market is going to go. For anybody that tells you by the end of the year, the S&P 500 is going to go to, or SPX is going to go to 8,000, 8,500, that's just a pure guess. What we do here on the charts in Trading the Close is read the charts. The charts are telling us where price is going to go. There's no hype. There's no BS. It's all in the charts. And I go through that day to day and give you a day-to-day basis breakdown of what the probabilities are going to be. Here, prime example, look at here. Even this year, we had so many analysts saying on the SPX right here that we were going to breach 7,000. And they did this. They quoted that back in October. And as you can see there, that wasn't a big push up to 7,000 by about 4%, but we've just been in this range for the past several months. And it's been really hard to decipher. Are we going to go up? Are we going to come down? Is the bear sentiment still around, especially with the AI data center build out? Well, at least for the last couple of days, it has not been. All right. So we jump into the S&P 500 on the SPY to track where we're going here on the charts. As you can see here today, we did have a decent down day after yesterday's explosion up higher above this parallel channel. Now, we didn't get down to this parallel channel yet. The parallel channel down here at the top is going to be at $688.53. Still a good breakout for the time being, but there's no follow through as of yet. As I said yesterday in the show, we needed to have another day pushing up higher. If we look at the 10-minute chart, we did see a pretty steep decline on the S&P 500 starting at noon. We were pushing up earlier all throughout the morning, looking like we were going to achieve that pushed confirming move above the parallel, but that just didn't happen, folks. We just had some decent selling pressure. Plus, we had a head and shoulders pattern on the 10-minute chart that played out beautifully down here towards the end of the day, all selling down here, ending the day at the lows on the 10-minute chart. Now, what does this do for the daily chart? Not too much. As you can see here, we're trending up at the moment. Support still is going to be on this inclining trend line, which has proven to hold price all the way since the April lows. Now, if this price does break that trend line, now we're talking about a different story here. If you notice, we've not broken it and confirmed a move underneath it in all of these attempts on bouncing on that trend line. But we are so very close to it. It's definitely what I would call the warning track, unless we get an accelerated move up here on the S&P 500. Next up, the Qs. And on the Qs on the chart yesterday, I did mention the $624.97 would likely be a sticking point, albeit minor resistance, because we did tag it back here on December 26th. So we simply returned right back to the place of resistance, and price pierced it and then plunged down to finish the day underneath this resistance line. Until this resistance line is beaten, it is still the line in the sand to beat. But keep in mind, the more and more we hit that resistance level, the weaker it becomes. Now, to the downside, clearly you can see this parallel channel has provided support on the way up for the Qs. And if that does break, it will do so right around $617.76. If it does it in the next few days, that could then open the door for a pull down to the $600 to $605 support zone on the Qs. Next up, the SMH also did take a little bit of a day off, down 0.67%. We noticed we did have a nice 4 days pushing up here on the charts, and then we have since paused. Makes sense. We've had a great move into all brand new all-time highs, and so price needs to consolidate this move out. First support for this will be on the 50% area of the parallel at $380.39. Resistance to the upside, though, guys, we're talking over $420, as SMH won't go there directly in a straight line, but still, nonetheless, it is in the top 50% of this parallel channel. Next up, the IWM. IWM also took a little bit of a breather today after this accelerated 3-day push, down 0.23% on the day. Why is that important? Well, that's important because this IWM index does include a lot of regional banks. And as we pointed out on the heat map, the financial sector was not that hot today. Matter of fact, it was all mainly red. So that makes sense why a lot of these indices, especially the smaller cap IWM, is pulling down just ever so slightly on the charts. But we have had a surge in IWM small cap tech plays that have really pushed up recently. That's been keeping this chart from declining even further from what we saw from the financial sector today. Next up, we've got Bitcoin. Now, guys, look at this. I've been talking about this 50% area of the parallel literally till I'm blue in the face, and blue with the shade of this parallel that we've got here too. We've been talking about how this 50% area is generally very sticky, where we have around 90 days of consolidation around it, about 100 days of consolidation, about 60 days of consolidation, about the same thing around 60, and then we're sitting right here around 60 days on it too. So this most recent attempt to move up was a great move on Bitcoin. And I said yesterday, as long as price can consolidate right here, potentially just right along this 50% area, the parallel, this would be a near-term cup and handle pattern that would carry a measured move up here to the $103 to $102,000 mark on Bitcoin. That will be the next resistance level. $100,000 level will be significant psychological resistance, but this cup and handle pattern, if it plays out, now keep in mind, it's immature right now, but if it plays out, it then will propel the Bitcoin up higher on the charts. First stop there at 100,000, next stop at 102 to $105,000, depending upon how rapidly it gets there. Lots of resistance from 100 to $105,000 on that chart. Next up, we've got gold. Now, gold did put in a little bit of a down day, negating most of the gains that occurred yesterday, but it's still maintaining itself up here in the top 50% area of this near-term parallel channel that you see here on the chart. Much better pattern than what was developing down here with this L-shaped bear flag. It's trying to fight its way to get out of it, and the only way for it to do so is to bust through this candle. The high of this candle on gold is $4,550. Until that point occurs, this is considered bearish consolidation, folks. Even though it's in the top 50%, it's still all contained within this big red candle. Notice this. We've had every close since this red candle occur inside of this red candle. That tells me, and the majority of which has been down here. This is all L-shaped bearish consolidation trying to retrace to the top. Only way to negate that, as I said, is to break through the top. So probabilities still dictate more downside on gold in the near term. Next up, we've got silver. Silver putting in a very similar pattern here on the charts. Didn't quite give up all of the gains that it did occur yesterday, but as you see here, it's just slightly stronger than gold up here on the charts. Very similar pattern with this red candle encompassing all of the daily closes that have occurred since then. So the one thing for it, though, for bulls, the same thing on gold. If you want to see gold and silver move higher, you need to get price to come up a little bit more, consolidate, and then break through this red candle. That flips the script, that flips the probabilities for more upside. But as of right now, we're still all in this red candle, which does imply a little bit of more near-term downside on silver. Now, keep in mind, a long time ago, several weeks, if not months, I called out how we had this this cup and handle pattern developing on the weekly chart of silver from this pivot high all the way over to this consolidation that occurred in October of last year. This cup and handle pattern has a move all the way up here to $89.38. So I was fully anticipating with this move up that we were going to go up and tag that level. That would have made me feel much more confident that we were going to see a lot of downside on silver. Since that level has not been tagged, there's still a chance that price can break out and test this level. And then I think we're going to have a lot more selling pressure in silver. But near term right now, still a little bit bearish. So we'll see if we can beat this red candle. And if we do, then we're tagging that measured move target up there at the $89 mark that was displayed on the charts. Next up, we've got U.S. oil. U.S. oil here showing clearly that we are still being rejected from this declining trend line here on the charts. Not the greatest sign for oil in the near term, but another resurgence up to that trend line will do this. It will increase the probabilities of a breakthrough. The fourth attempt is generally about a 50-50 shot for breaking through. The third attempt is actually higher probabilities of a rejection. That's exactly what we got. We'll see right now we're right into support. Notice these pivot lows that occurred back here in October amongst all of this consolidation too in December. So we see a wick developing at the bottom of the candle today, implying that this area still is acting as support, at least in the near term. We'll see if that breaks in the future, but eventually if price does come back up to attack this trend line, there's a good shot that we will break through and head up to the $61 next level of resistance. Next up, nat gas. Nat gas, as I told you the last couple of days, this is getting into a very interesting area for picking some up to go long, as we had a nice buying pressure day here on natural gas, pushing price back above the support level at $3.30. Now, next resistance, should this momentum continue, as you see here displayed on the chart, is at $3.70. Would be a nice pop there for natural gas. It would take a while too to get through this consolidation. So expect if price does get here, we could fight to get up to this big red candle. Then likely we'll start consolidating before another attempt at a move higher. Next up, we've got MCHP. One of the viewers did request this. Thank you guys so much for your comments. I love getting to some of these charts to give you guys some insight, especially for ones that you may have some action in. All right, guys, so let's look at this chart a little closer. We see MCHP on the daily time frame. And we've got a declining trend line from this July 2025 pivot high that is designated the breakout line. Now, notice what happened when price broke out. Now, guys, these are my favorite plays right here. By far, some of the most profitable plays I have made in my small cap catalyst service have been right here through breakouts and then a retrace to the trend line in which it broke out from. I've talked also till I'm blue in the face in this show about how price action likes to break out, retest the trend line, and then bounce and go higher. And that's exactly what happened on MCHP. You needed a little bit of patience during the sideways consolidation, which turned out to be a bear flag. But look what happens when bear flags get negated. Voop, straight up to the upside, as we see right here, running straight into the 618 fib retrace from this pivot high that occurred back in May of 2024. So right now, that is the resistance level. We're nearly overbought on the daily time frame, registering at 72.58 on the RSI. Anything over 70 is near-term overbought. So a consolidation would be in order. And if we do decline a little bit, first support down here at 68.98, followed by 65.08 for a price to gain momentum to break through this resistance at 75.18. And if it succeeds at doing that, then we're running up here to this next resistance at 88.43. So a lot of potential here, but in the near term, be expecting a little bit of pullback or consolidation before we do break through that 75.18 level. Next up, we've got Intel. Intel had a great push today, but you see it gave up most of its gains. It was up nearly 11% on the day before it did get rejected and had price come down to finish about 6.5% up on the day. Still, nonetheless, great move for Intel today. Notice what's happening here on the charts. This is another great example of how technical analysis works on the charts, folks. Sometimes it's as simple as one trend line, and you can get ample amounts of information from it, clearly displayed right here on this one trend line with Intel. So let's just take a look at this. We have a pivot back here from August 2nd of 2024, and I drew the next pivot point, or drew the trend line to the next pivot point here in September of 24. Then all I did from that point is draw that trend line straight out. And notice when prices come all the way back here in October of 25, we're talking about a trend line over a year ago. Price reacts to it, gets rejected. Another attempt move up, gets rejected. Another attempted move up, didn't quite tag it today, kissed it. but it also got rejected basically at this $43.48 level of resistance. Great move on Intel, but as I've said on other charts, when you have these big moves up, you want to see consolidation, especially when the big moves are into resistance. You want to see consolidation if you're a bull, so it can break through and go to the next resistance at $47.45. Any sort of failed move down here, the first support is going to be $39.36, followed by this inclining trend line, which likely will be around $37.60 should price retreat down to that area. Notice in this area too, we've got the top ends of all this consolidation. So that should be some decent area of support. But notice this would be then the fourth tag of that trend line, which then is a 50-50 on breaking through. So be mindful if you are investing in Intel, if it does collapse here, it could break through this trend line, and just be mindful so you can add to the position or have an exit strategy when you're playing that. Next up, UMC Electronics. This is United Microelectronics. They're based in Taiwan, and they don't design and sell their own chips. As a matter of fact, they're actually a contracted manufacturer. Well, what happened today? We saw a nice push up, 9.98% on the chart, pushing up here. And they did release their December 2025, as well as full year sales guidance, which were increases across the board. So we saw a great pop on the charts today. But if I zoom in a little bit more, you can see exactly where price stopped. And it's simple to do. We just got to draw a trend line from this pivot, connect it over to that pivot, then that connects to this pivot, and then boom, you can see here price accelerated, pierced it, but then finished the day right here on this trend line. Now, good news is this trend line's been hit many, many times already in the past, likely due for a chance for it to break through. If we look here on the daily RSI, we're overbought in the near term. So that would imply also we would likely need more consolidation. And then that could help it gain momentum to break through and push higher up here near the $10 mark at $9.88 on the chart. But should it get above this trend line, as you see here, it's been held down under this trend line for over 2 years. So that is a good place for it to break. It could release a lot of buying pressure there for UMC. Very interesting chart right there to display. Next up, Skyworks, one of the bigger losers today in the stock market, down 9.73%. And it also plunged underneath this long-term trend line, guys. Now, I got to go way back out on the charts to get its origin. Let me flip over to the weekly time frame. Bear with me while it loads. There we go. And then we can see here, this is from a December of 2008. 2008, guys. So we're talking a long time ago where prices bounced off of this area, pierced it, got a bounce right back up, and now we're testing it again. Very significant move there for Skyworks. Now, it's just 1 day of piercing this area. And matter of fact, in near term, you can see clearly here too, by drawing another easy trend line connected over to this pivot here, price action got very, very close to tagging this level of support. So near-term support is going to be on this declining trend line. Next area it could likely tag is around $57.60. If that breaks, the next support is going to be slightly above $50, right around $52.53. Followed by this longer-term horizontal trend line stretching all the way back here to October of 2014. This would be a fantastic triple bottom potential play for a bounce play. But keep in mind, whenever price does break trend lines, like I've already said in the show, it likes to go down and then retest that trend line. So the more it falls, the better opportunity it has for a swing trade to push on up and tag this inclining trend line. All right, guys, lastly on Meta, another mega cap that we have here to display. Always love going over these mega caps with you because a lot of cases, there's a lot of folks invested in these companies. Now, Meta has seen a steep fall from this pivot back in August of 2025, come down, made a nice V-shaped recovery, and since then, it's consolidated sideways. Yes, it's been a little bit bearish, then a little bit bullish, and then we've come down a little bearish. But all of this, if you clean up the noise, is just consolidation. That's winding up for a bigger move on the charts. Now, interestingly, this candle right here has a fake print, and it's printed all the way up here to $710. That likely will be the area if price starts curling up to tag the 50% area of the parallel channel, which also coincides with the bottom end of the consolidation that occurred back here in October. So near term, bullish activity can push price up here near that $710 level. So be watching that for the first level of resistance. If this bullish consolidation fails, It will do so under this support level of $637.63, and that it could increase selling down here to $600.38. So there you have it, bookended with price action and potential moves there for Meta. Good luck to everybody on that trade, but I'm seeing this as a little bit more bullish consolidation, which could yield this fake print and get to this fake print up here around $710. All right, guys, that wraps up Trading the Close. Thanks so much for tuning in today. I'll have another show out tomorrow at 4:20. Don't forget to like and subscribe to the video. Send it out to your friends and family so they too can gain some insights into the stock market. Thanks so much again for watching, and I'll see you guys on the charts. Take care, folks.